It's time for Street View at Lunch, and joining us live on the show is Amisha Vora, Joint MD at Prabhudas Lilladher. Good afternoon, Amisha. Thank you for joining us on Markets at Lunch. First up, what's your call on the market? Because we just seem to be stuck in this range for a really, really long time. What is it do you think that's going to help the market break out of this range on either side?
I think that, some clarity emerging to start with on this GAR issue, which probably can help us restore the FII flows and the volumes also. That will be one thing which can help us. And the second important thing I think would be, which of course not very India-centric, but the movement in oil price. If oil happens to soften, then I think the pressure on rupee, fiscal deficit, inflation, and so the interest rate all can change. So that is also going to be a very, very important factor to get the upside breakout from the range, which is maybe 5,050 to 5,500. Apart from, of course, some of the other important bills which are pending, but that will have positive impact in case they get passed, but which will be pretty gradual.
Amisha, hi, afternoon. You talked about the rupee weakness. How bad could it get given the kind of macro environment that we're currently in? I mean, we've already seen a breach and a conclusive breach at that. Post the 53 per dollar mark, how bad could it get from here? And B, what would it mean for some of these high dollar denominated debt companies which are in any case, grappling with money issues?
I think, let me be candid and accept that I'm not a currency market expert, but whatever that I read and understand, it appears that things are getting pretty complicated on currency front. Because of the slowdown in the region in terms of broad money flow coming from the FIIs, FDIs as a whole, and there is a bit of a pulling back. Then, of course, there are India-specific issues, and we will be having a very large import and currency requirements, and in an environment where FII flows slow down, some of the large global organizations talk about maybe going slow on India for a while, impacting the FDI issues. I think this has potential to probably go between the range of 54, 55, not impossible, and quick and corrective steps which we are hopeful for last 1 year in terms of FDI and some of the other things. We don't know when, but some of those things can really put a slight breather on this currency movement.
Right, Amisha, let's also talk about some sectors. What's your view on the banking space, especially in light of the Basel III norms that have been put out by the RBI yesterday? Would you take a position in any of the banking names?
I think our analysis shows that Basel III norms will not be impacting private banks' ROE as much as the public sector banks. And of course, within public sector banks also, there is a category of banks which will be a little more impacted because of their current capital structure than the others. So we think that we remain comfortable on the private sector banks, be it ICICI Axis combo or be it Yes and IndusInd combo. We continue to remain pretty positive on private sector side of the banks. And in PSU, we are extremely selective. We like selectively Union Bank, where a lot of asset quality issues and system-based asset quality issues and so on and so forth has been very largely provided for. We think that from here on, they can show substantially improved performance. So we like very selectively on PSU side, but otherwise we remain focused on private side.
Amisha, what about Hero MotoCorp? I mean, what is the bigger disappointment? Is it that it was a way below street estimate dividend that Hero MotoCorp gave out this time, or is it just a valuation play, which is why we're seeing the stock ease off?
Sometimes it's very difficult to assign a particular reason. Why I will tell you, because I don't think in terms of Hero MotoCorp the expectation that next 2 years earning will grow at 25%. I think it was pretty clear that the next 2 years earnings will grow somewhere between 13 to 18%. And I don't think there is anything which has happened which suggests that it will be otherwise. But there is some reasonably good visibility that at least a 15-14% kind of a bottom line growth will continue for next 2 years. So my argument is that the valuations were costlier maybe 5 days back too. So anything in particular which is impacted today, and if that could be valuation, I have my own doubt. I believe that yes, a little disappointment on dividend front, and beyond that, the imminent slowdown A in the sector and B the rising entity of the Honda together would have prompted some profit booking in the stock.
Misha, what about the FMCG pack? We've just seen Marico report disappointing set of numbers, especially on the bottom line, but the big boys have done well this quarter. Would you have a bias in favor of an HUL?
I think yesterday's HUL's analyst meet, the management commentary continued to remain extremely positive, both on the volume growth front and the stability on margins. And they do not seem to be impacted largely by any of these slowdown that we've been talking about, except in few marginal categories of theirs. And on whatever expanded base of top line and bottom line that they have in last 2 years, they seemed pretty confident of a 15% plus kind of a bottom line growth. No doubt for HUL, the valuation always remains a question mark at 30-31 time FY13. But I think typically it is the change in the growth trajectory which then makes a stock very vulnerable to correction. Till the time you don't see that, probably stock's trajectory remains positive. And in terms of HUL, the growth trajectory seems to be pretty alright even as of now.